Welcome to our monthly economic update. I'm John Cleaver, partner and senior financial advisor with Beyond Wealth Advisors. And joining me today is Dennis Bacon, partner and chief investment officer. We are coming to you via Zoom. Dennis, what's up with the Zoom call today?
Well, it really has to do with three words: Jackson Allen Bacon. Our first grandson was born on Sunday, and so Michelle and I are up here with our son and daughter-in-law for the week.
Well, first and foremost, congratulations. I know how excited you both are for your family, and everyone's doing well. And we certainly wish them all the best, and look forward to getting to meet the little guy here soon. Future Chicago Cub slugger, I'm sure, in the family. So let's get right to it. Lots going on. So what's up this month in terms of the monthly update?
Well, if you look at the headlines, it certainly looks like the economy and the markets are rolling forward and doing great. But I find that if you really want to find out what the economy and markets are doing, you really got to look at the true depth and breadth of the market. In the past, I made a big deal about all the components of the economy that are improving, and certainly there are many. But recently, we have had an uptick in the unemployment claims. They've begun to rise again. And sectors such as consumer services, think restaurants and other things like that, transportation, energy exploration, are still lagging very badly. On the market, I have some fairly significant points of concern. And these aren't, overtly, doom is coming concerns. But over the past 7 months, the S&P 500, the growth stocks have become pretty narrow. There's fewer and fewer companies that are really expanding. About 200 companies of the 500 have increased in value, with about 50 of those companies having returns of over 50%. But the real concern is on the 200 lower stocks that performed worst are down on average 20% from their all-time highs. And on average for the year, which was before the all-time highs, they're down on average almost 30% across those 200 stocks. That presents a little bit of concern, and part of it is the history I have with the market. I go back in 1999, and we had a market that looked a lot similar to this. We had what was called the Nifty 50, which was the 50 technology stocks that were driving the market higher, while 300 stocks were certainly lagging the economy. And so that gives me some concern going forward.
Yes, that's definitely understood, and it's been a unique and interesting time as we've come through this global pandemic and watching companies interact and deal with this on a day-to-day basis. So it sounds like you've explained that a little bit of your concern there, but as you look going forward, how do we come out of this, and how deep is that concern?
Well, it's kind of a two-edged sword because if we have the pandemic drags on, we have a disruptive event in the economy, there's something unexpected that happens, the risk on the high-flying sectors of the market, which are basically consumer discretionary and technology, really stand a high possibility of having a significant drop, which will certainly hurt those stocks. Now, that is really bad, particularly if a lot of your investments are focused in that area. On the other hand, if we have that same situation, all these companies that are lagging really probably don't have nearly as much drop, if any, during those times because they're not at high levels. The other side of the sword is this, though. If we have a broadening of the economic recovery and it starts touching those sectors that are not doing well, then at that point, all of these laggers should grow fairly substantially in valuation, which also presents a great opportunity, as we go forward.
Yeah, that's fantastic. So I know the question that we get often is, okay, so with all of that, in light of where we've been and kind of where you see us going, what should an investor be doing right now?
Well, I guess if you've been one that's been following all the high flyers and trying to catch up with them and being focused directly in those companies that are really taking advantage, or not in a negative way, but they're positioned to take advantage of it economically from the current environment, you need to be very careful because at some point in time, they're going to be way ahead of where they need to be. It's probably a little bit wiser to stay diversified and keep some assets in quality, value-oriented stocks, not necessarily the ones that have been totally beat up, but good quality value stocks. The second thing I think anyone should consider is you can consider rebalancing your portfolio sometime over the next couple of months. This will effectively sell off some of the gains you've had in the high-flying stocks and then buy some of these things that are lagging. Now, I don't know, in the investment world, I guess I'd be calling selling high and buying low. Typically, that's a pretty good strategy in the long run.
Right.
So I would say those are the areas that you really need to be thinking about as we move forward.
Yeah, that's great advice, and thank you for sharing. And as we wrap up here this August version, and we wrap up summer, we start looking towards getting back to school, hopefully across the country. We also have this little thing called an election coming up here in a few months. I know that's something that you want to address in the September version. So do you want to put a little plug out there for next month's economic update and what maybe listeners and viewers could expect?
Sure. Once we get to the September, we're going to have a little bit better idea of part of the platforms that the two parties are going to do, and we're going to try to break that down a little bit and address what the economy looks like if one wins versus the other. It's not going to be no political statement on that. We're just going to look at what the effect, and they'll both have positive and negative effects on different areas of the economy. So we just want to have a little bit of discussion on that, so people can be aware of what our outlook is for either Plan A or Plan B.
Awesome. Well, thank you for that. And this does wrap up this month's monthly economic update. We certainly want to invite everyone to visit our website at beyondwealthadvisors.com and be sure to click through to our YouTube channel and watch all the information out there regarding what's been going on. Dennis, enjoy that time with your family. We look forward to having you back in the office. And to everyone out there, have a safe and stay safe. And we look forward to seeing you next month.
And go out and have some fun the rest of the summer.
That's the plan.
Okay, I think we're done.
We're done. That's a wrap.
I can have another cup of coffee.